What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over some of the current data points, break it down on what's really moving it today, and go over everything else that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. Starting off, SoFi is down 0.47%. It did so far have a low of $6.36 over this last little bit. It does look like it wants to recover. Not really enough there to kind of break above that next strong resistance level. But needless to say, there's a lot of things that's really moving SoFi in either direction. Starting off, you do have last minute jitters associated to GDP and PCE. More specifically PCE, a lot of analysts are starting to say, you know what, if negative, potentially the Feds could have rate hikes on the table. And you know, especially I've brought up time and time again, that's literally the only thing that the market cares about right now is rate cuts. So essentially that's what's causing more volatility, especially in growth stocks and sectors that are very sensitive to interest rates. So that's why you're having a lot of volatility with SoFi, but at the same time, it's faring a little bit better than the other fintechs, and that is because it did get a analyst rating today, finally, but no actual price target, just a buy rating. Reiterated that came out today by Jefferies. John, who does have a 61% success rating, so rather good in comparison to the last couple. So obviously 51%, 46, and 30. So I think in general that is fairly good. And we do have a couple days left still within Q2, so I've started to see if any analysts have been changing their estimates for earnings per share or revenue, and so far nothing really changes for that. So I'll continue to monitor that to see kind of expectations coming from revenue and whatever. So right now there is 11 analysts with a consensus of 566.41 million. So one analyst did jump on board, kind of bullish, because it went from 565 to 566 million. So overall, pretty good stuff. And when it comes to SoFi, I'm sure they're going to have another home run earnings, just whether the market likes it or not, or how it kind of adjusts. We'll just have to wait and see. Aside from that, though, it's just been piggybacking off of the broader market because there's been no specific news associated to SoFi, no SEC filings, nothing like that. Shorts are really, they're not doing anything. So they're returning around 87,000 shares, and that's been the case for the last several trading days. They haven't done jack all. So probably I would estimate that they are waiting for GDP and PCE to either pounce or potentially to return some shares. Currently setting at 17.76% of the free floats being shorted, 184.35 million shares overall are being shorted. And that works out to be $1.19 billion. Cost of borrow average is 0.95%, and then utilization 72.79%. So pretty high if you ask me, but then again, I don't know. I don't really know the downside of what shorts are anticipating. Like, it doesn't logically make sense if you ask me, but what do I know, right? I'm not a financial advisor. One thing as well, I just wanted to bring up to your attention, short score is a 74.8. So the higher the number, the higher the likelihood of a squeeze happening. So that has been increasing slowly. So once again, for those of you that like a squeeze stock, you know, this might be a little bit more appealing. In my opinion, I don't really see SoFi being a squeeze play by any means, but obviously just wanted to throw that out there. Looking at options, 2.24 million in calls, 547,000 in puts. So dollar value wise, kind of low in comparison to what it has been over the last several trading days. 43% of all the options being done so far today are optimistic and bullish. And of the call options that are being purchased, as usual, more of a consensus for it to be around the 650. So that's kind of aiding into that rinse and repeat cycle. Like I said, that's kind of aiding in a lot of manipulation. Currently, this is all the open interest, 32,000 at that 650 strike price, 27,000 at the 7, and then 45,000 at that 750. So you do have another wall. So in the short term, just watch for these 2 points. So $6.45. So that's going to be a big transition for SoFi. Then above that is going to be 650. So that's going to be more of a man-made resistance point brought on by options. These are all the transactions that have occurred so far today on the secondary market. So not all that much, but over the last several trading days, you have seen a lot of buying happening. And that's obviously just ETFs and institutions rebalancing their portfolios, as what typically does happen the last week in any quarter. So anticipate the same to occur probably the next couple trading days as well. But aside from all of that fun stuff, on the actual chart itself, still lower percentile of the boiling band. Stochastic, you do see kind of a bullish deviation starting to form, so white line above the red, but it is still at 22, so rather oversold. A number of retail investors have been getting out for at least a little bit since it looks like the 24th, or if you think bigger picture, looks like ever since May the 20th. So I think right now the technicals are still somewhat choppy, so potentially given the circumstances of what does come out in the next couple of days, that could really escalate the downtrend when it comes down to SoFi. So once again, we'll just have to wait and see. One thing as well I just wanted to play for you, it's a couple minutes long, but it goes over just the mentality of the next couple of days and potentially how PCE could really shake the market. So let me know your thoughts. Don't forget to hit that thumbs up and give yourself a shout out if you have been buying, if you've been selling, what have you been doing with SoFi? And without further ado, let's get right to it.
Keeping a slight hope of a July cut on the table ahead of Friday's PCE number. You see that little 10% probability there on the left of your screen. But my next guest says, given how persistent inflation has proven, he wouldn't be surprised to get a hike before any cut. And because of that, in part at least, he's avoiding tech and playing a bit of defense. Joining us is 𝗪𝗡. He's CEO of Palumbo Wealth Management. Going out on a limb here, Phil, why?
Yeah, so coming into this year, I've been consistently saying that I thought markets would perform well as they have been, simply because earnings are going to accelerate this year and in 2025. And we're probably closer to the end in terms of this Fed hike cycle than the beginning. However, as we've seen, inflation has been persistent and it's been sticky, especially on the services side. And we're a services economy. And when you got an economy that continues to perform well, as we are seeing, and you got stimulus, fiscal stimulus still coming into the economy with the different acts that were passed, it may be tough to get services down. And inflation is the number one threat to low-income households, retirees, and really for the overall economy. So I think the Fed is right by holding off. The problem is that he may hold off too long or at some point make a mistake, and that's the biggest risk that we are all exposed to as investors.
A lot of people have kind of correlated tech reigniting with these expectations for a rate cut, so you're not among them, and I imagine that's why you're not a big fan of that trade.
Yeah, so Kelly, I look at opportunities where you got fair market value and what's trading below fair market value. And that's something that I'm looking at on a continuous basis. So if you look at the tech sector, which is great and it's done well, and those are phenomenal businesses that will continue to do well over time, it's just that they're overpriced for what we're looking for. And I think for any investor, it's like buying real estate at a 1 cap or a 2 cap. Nobody would do that. And that's kind of where we're at with technology. But if there are other areas of the market that looks attractive.
I mean,
So yeah, there you have it. That's obviously what's going to be really influencing the broader market in the next couple of days, especially PCE on Friday. So hopefully a lot of analysts have the same mentality as him and gravitates towards, let's say, SoFi, because let's say you want to consider it as a bank in comparison on a multiple level is a steal of a deal. If you compare it on a fintech level, it is a steal of a deal. Just some reason the market seems to absolutely hate SoFi. So let me know your thoughts. Don't forget to hit that thumbs up. And with all that, appreciate all of you watching.